Okay, this is Brian Stoll for Timing Strategies, Tuesday, October 23rd. Got a little bit of follow through from yesterday. Obviously, don't need to recap the obvious because that's enough of the media. We don't want to do that here. What we're looking for again is that we got long on Friday, 60%, and then we added to the oil position. I'll get to that in a second on yesterday, and that's worked out real well. For the indices, basing it on the SPY spiders, we're looking for a trade back up into this level, maybe about, if we're lucky, into that 152 level, 152 half, maybe 153, 152 half, 153 half to take a profit. Again, we did buy here, so we're looking real good. We got a very low risk position regarding end of day. That's in the RIDEX. And being 60% long the indices, will look to take a profit somewhere, if we get it, at the 153, 53 half level, and then look for a retest of these lows back down in here. Let me go to the Qs. It's not a whole lot to speak of, except everybody's talking about Apple, and Q's kind of basically the beneficiary of the Apple product. Breaking all-time highs, new highs. We got a gap down underneath there that will be closed, in my opinion, sooner or later. In fact, we got some gaps all the way down to here, which I believe will be closed. But that 20 bar that we hit yesterday and on Friday last week held real well. So we're starting to break out of that chop. We got to close above there. What that does tomorrow or the day after that, sometimes we wait a day and see what happens. It's going to be anybody's guess, but things are looking real good for that portion of the basket of the indices as well. Going back to the SPY, again, if we take out these highs, depending on the expansion of the range, if we get another day of maybe 1% or higher on a closing basis tomorrow, we will be taking out a piece of that position for a profit. Let me go to the OIH, which we did get long, only using the RIDEX funds with the energy and energy services end of day. We got long in there yesterday. Beautiful trade. It doesn't script any better than that. We could blow through that bar tomorrow very easily, take out that 21 bar average. We could get back up into that range. At that point, I'm looking for more of a, what I would call a snag trade, where the market just goes from that threshold higher. Let me just get rid of that so we're not looking at stuff. And then higher above that green line, and then maybe lower, and then snag again, higher, back up. I don't know if that's going to happen. That's just guessing, but for now, if we can get that oil position up somewhere into that range above the 196 to 199 level on the OIH, we may look to take a profit there, because again, this green line that we've got on the trend threshold here at about 191, basically we've got a swim or a zigzag going back and forth above it. So if we can get a little bit of move back above there by another 2% or 3%. Incidentally, the OIH, the energy sector, was the biggest winner today. So again, our end of day systems are doing real well in the RIDEX timing models. Want to take a real quick look at the IWM, because that being the Russell, looks like it's running out of gas here so far. If we can get a move back above that 82 level on the IWM, we absolutely, when we get back above there, are going to be selling that, probably the whole position if we're lucky. Right now the futures are down by about 5 points on the S&P. For whatever reason, we should see, I don't know, maybe a lower gap open tomorrow. And if we get a lower gap open, where it opens somewhere in this range, that's no good. If we get a lower gap open in the morning, do it again. If we get a lower gap open somewhere in the range of today on the IWM, and then we take out the highs of today, that's a very, very strong bullish signal. But again, if the range expands above that, about the same as we saw on Monday, we absolutely are going to be a seller there. Because in my opinion, this is just a short squeeze. It's going to run out of gas, and evidence that by looking at the IYR, which is the real estate sector. If we get a move back above tomorrow, above the high of that day, into that 2155 bar level, On the IYR, maybe somewhere around the 76.50, 77.50 area. We absolutely will be looking to take a short position again in that. Same thing with the XLF, which is the financials. If we can get a move back up above into that 33.50 to 34 level, be looking to short sell that thing right around that green line level, right at about 34, if we can get a gift that high. Last point I want to bring up is the SMH. It's basically saying stay away. We got this huge gap in here. And that was created by Maxim. So instead of using the SMH, we're kind of handicapped for the time being. We're going to have to use the SOX, which for the semis is the old semi-index before the SMH showed up. Semis are just saying no thank you. Not getting a lot of love here. And again, if you look at the NASDAQ, the only thing powering that thing up is the internet. Google, Amazon, RIM, all those internet names. That's going to be short-lived, in my opinion. Yeah, we could get the Qs to keep going higher based on all the RIM and Google and Apple news and so forth, but I don't think it's going to last very long. Again, this could be what we're getting here right now is basically an expansion where we've got higher high, now we've got a lower low that took us down to here. That doesn't look too good. All right. Then we got a higher high back up to here, down to here, take out that low, and now we're back above here. If we come back down below this level on a closing basis, below the highs of yesterday, or excuse me, not the highs of yesterday, but the highs of October the 11th, that to me says sell. And we're right back into that range, still looking for that gap to get closed. But other than that, kind of just a hold day. We got a holding pattern right now for our end of day systems. We'll see what happens tomorrow. Tomorrow and Thursday are pretty much going to be the big days. And again, we got the FOMC meeting coming up next week, October 30th, 31st. So no need to get too tricky going into that, because of course the Fed is going to support the market to make sure that everybody realizes that the markets only go up. This is Brian Stoll again for Timing Strategies, Tuesday, October 23rd. Please send us an email if you have any questions to admin@timingstrategies.com. Check out our website, www.timingstrategies.com. Look forward to hearing from you, and wish you all a good night.